best to take 10, maybe 15 minutes and teach a very profound trading pattern or series of patterns that you can look for and that you can take to profit very nicely from the market. So let's get right into it. Okay. I hate to make this too basic, but I think the thing to always keep in mind in trading is that you can't make money unless the market is moving in a vertical direction, up or down. Okay, it has to be, side to side is going to chop you into little pieces and make you lose all your money. So you want to trade when there's the most chance of, number one, there being vertical motion, volatility, and number two, you want to trade when there is an ability, the circumstances, the environment is ripe for you to be able to determine the direction of that vertical motion. Okay, so two things. You need vertical motion, volatility to be present in the market, number one. Number two, you need a way to figure out which direction that vertical motion, up or down, is going to go. So let's get into something very simple. Okay, you want volatility, right? So in looking at this chart, I think it's pretty obvious that this candle right here has provided a tremendous amount of volatility. Look at this is a 1 hour chart. Look at the range in this candle, how large this candle is. It's an elephant candle. It's huge compared to all these other candles here over the last few weeks, couple weeks, right? So you might want to ask yourself, well, I mean, how can I predict when that's going to happen? Well, let's go back and take a look if there was a news event when this happened. And of course, there was. On Wednesday, December 13th at 1400 hours, all you have to do is go to Forex Factory and go back. You can click back and forth here on the date area here, forexfactory.com, on the calendar. And just click around to that date and that time. And you will very easily see that on that date and at that time, there was an FOMC statement, okay? FOMC economic projections and the funds rate. So all those things happened at 1400 hours, 2 p.m. New York. So obviously that's what caused the market to jump, okay? But you can't just see the market going up and decide to hop on and expect that you're going to make money, though, because the thing is, it's so wild, it's so volatile. Within this 1 hour candle, price was probably zigzagging all over the place, up and down, up and down, up and down. It's just not viable. But what you can do is you can wait for the chart to put in a wave pattern, because in trading, price always seems to move in waves, right? There'll be a wave up, a corrective wave, and a continuation. And more often than not, okay, the size of this wave, okay, is going to be, if it's a substantial one, it's going to be replicated in that continuation, okay? So you're going to be able to pretty much measure that wave pattern and know that the resulting second wave is going to be, you can measure from the bottom of it to the top of it and estimate and predict exactly how far it's going to go. Now, is this always to the penny? Hell no. But is it always very, very close? Hell yes. So that's something that you want to keep in mind. So your goal here, okay, is to be able to, number one, identify a very strong impulse wave, okay, which we did over here on this with this FOMC announcement, right? On the 13th, I guess it was right here at 2 o'clock. That's easy to spot, okay? You can actually know when those are coming, because you can keep track of the news. You can see what news announcements are scheduled for the next day, week, month, etc. And you can be ready for these big news announcements. And if you ever, want to know what caused a huge spike, just go back to that date and time, check the news announcement, and then keep your eyes peeled in the future for similar news announcements. I mean, it's not that complicated. Okay, so now that you know how to spot a huge wave, and now that you know that very, very, very often these things will then replicate themselves in terms of size after a pullback, you're ready to go and figure out your entry point for the wave two. So in this case, once again, I just want to reiterate that you had this impulse wave was this long, okay, from the bottom to the top. You can right click that line, hit clone, and then take the cloned line and measure where the next wave is going to go to, okay? And so if we look at that, we can see that the next wave went almost that high. Almost that high. Not quite, but pretty darn close, okay? So if you're a little bit conservative, your estimates, and there you go. Okay, so just know that there's potential. I think that's what my point that I'm trying to make is that when you see a huge wave, just know that there's going to be a corrective wave and then a continuation wave. And it's going to have great potential because it's going to be very close to being, actually, I made this a little too long. That wave, all right, is about the same as that one right there, okay? So just know that there's tremendous potential, but the trick is, okay, all right, that's fine. You can look at this and you can say, okay, I see a wave coming up. I see a very thin-bodied doji that was the precursor to the reversal, the correction wave. The corrective wave came down about 50% roughly, okay? And then we had another 1 hour doji that was predictive of a continuation wave. So if you want to be safe, you can probably pretty accurately predict that you could go long at the end of this corrective, beginning of the wave two, end of the corrective wave, and the beginning of the second wave in the pattern. And you could, place a stop up here towards the top. Okay, that's great. I mean, that is a good little trade right there. Okay, but do you really have to keep this large of a stop? No, you don't. The stop can probably be somewhere about half, okay, making your R to R much, much, much better, okay? So how do you find that? I guess that's the real question. If you've determined that you love this wave and you love this pullback and you love this continuation pattern here and you think it's going to go this far, you want to get in at right around this level, 61,916 at about 1900. If you've determined all that in your mind, how do you find a good entry that gives you a good tight stop, but it's a reasonable stop? All right, so let's look at that. So we know that 1900 hours, we're going to be looking for a pattern, and it's going to be at about 619,916. So let's sync that globally and go to a 5-minute chart. Again, we are at December 13th, 1900, which is just before the Asian Open, by the way. So that's something to keep in mind. You're going to be trading the Open for Asia. Wednesday, December 13th at about 1900 hours, we're going to start looking for a pattern. Okay? And here we are. We are at 1900 hours on the 19th. And we're looking for a pattern in this area. Okay? We don't know exactly what the stop's going to be, but we're looking for a pattern in this area. Okay, so I'm going to teach you a little pattern right now that is a great, fantastic pattern on the 5-minute, and it is a very, very high probability continuation pattern. Okay, so you can see that this section, which was our continuation, 1 hour continuation candle, after we had the pivot down and the pivot back up, after this big wave, we have a 1 hour continuation candle. So this is this section right here. So what I'm going to teach you now is something I call a 5-minute double bottom continuation pattern, and it's very, very simple. I am putting 15-minute EMAs on, okay, and this is very important. I'm trading a 5-minute candle with 15-minute EMAs, okay. Why not 5-minute EMAs? Because 15 EMAs generate a deeper dip, which basically allows you to get in at a more of a discounted price when you're trading 15-minute EMAs because they're further away from the candle's normal trajectory. And so if you double bottom off a 15-minute EMA, that means that you're getting a steep discount on price, but yet you're still getting something that is a continuation pattern. Okay, so that's what I also have the 1 hour on here, just so that we can make sure that we are above all these EMAs. You don't want to be up, we don't want to be below 1 hour, right? We want to be above. So there's the two 1 hour 200s. There's the 1 hour 20. There's the 1 hour 8, etc. Okay, so what we're looking for though is to play off these 15-minute patterns. This is a 15-minute 5, 15-minute 8. There's VWAP. That's a 15-minute 20. Okay. And I believe that's a 15-minute 50. So what we're looking for is a double bottom. Okay, so when we have our impulse wave, okay, and then we have our correction, okay, what we're going to be looking for is price to double bottom near the EMA that we have determined is the one that we think is good. And oftentimes what will happen, this is the way the market works. Everyone's eager to not miss out. So a lot of people, the more eager traders, will jump in after the first bottom. They all understand all this stuff, but they're still eager. And I've been guilty of this for months or even years. You don't want to miss it. Sometimes it only bottoms once, but yeah, a lot of times it does not. And when it bottoms, you've got a lot of people piling in right here after it bottoms. And then what happens? The market kind of spits you out suddenly with a little wick down, stops out everybody that had placed their stop under this level, and then the manipulators, the larger traders who pushed it down, scoop up those shares down here, okay, and then they take it higher, okay? So what you want to do is you want to avoid getting in here, okay? I want to fix this again. What you want to do is you want to avoid getting in here, okay? You want to get in here, okay? Anywhere after this lower, slightly lower double, okay? And you're going to have that, you're going to have that EMA right here to support you, okay? Not only that, you're often going to have some kind of a fractal over here, like a swing high, okay, that is also there to support you. Okay, keep your eyes open for that. That can give you an extra boost of confidence when you see that fractal there, okay? I don't know if I have one right here or not, but, we might have something right here with this with swing low fractal. That's also a possibility. We'll take a look at it. So let's look for the pattern that I just described and see if you can locate that pattern, okay? We've got that, the time is currently 1900 at the end of this red candle, this tiny little red candle here that you see. I don't know how well you can see that, but it's currently 1900, which means that we are now into the next candle here. We've got our impulse wave, we've got our pivot to turn, a corrective wave, big red candle corrective wave, a pivot to turn back up, and a full 1 hour continuation wave up candle. Okay, so this is in my mind, this is a high probability entry point and time. Okay, so now we're at that point in time, but we still need a 5-minute pattern to get the best possible entry. Okay, so we're basically drilling down and we're finding fractals within patterns that we need to look for, okay, and wait for. Okay, so let's go ahead and hit fast forward here. 5-minute candles, 5 minutes at a time. Okay, there's a little bit of I don't know if you can see that, but there's a little bit of a pop right there. Okay, a little bit of a pop right there, and that represents a lot of traders saying, okay, well, this is it, because we've touched the 5-minute or the 15-minute 5 EMA, and we're ready to go. Okay, we're ready to go. So, but I wouldn't be ready to go here because I would want a double. I would want to see a double bottom. Okay, not a single bottom, but a double bottom at this level. Okay, so then price goes up a little bit more, and you got even more people piling in. But guess what? There's just about to be a rug pull here, and that's very common. It happens all the time. And there's your rug pull. Okay, People are getting like, shaken out here. Price goes even lower than this low, so you have begin to have probably have a couple of stops being hit. Okay, and price is still okay. Now price is turning around a little bit. Now what happened here? What happened here was that this first pop, okay, lured in people. The big boys pushed it down, tried to stop some people out, and tried to scoop up their share. So at this point, our location is really good. Coming back here again. Don't forget, you have confidence that you've already done your homework, and you know you're in the right place. Now you're just trying to get a good entry. Okay, your stop doesn't have to be way down here. Okay, now that you see a double bottom forming, you can place your stop under this double bottom. You have EMA support. You're above all the EMAs. Okay, you know that you're above all the EMAs. You don't have anything really above you stopping you. And your target can be up here at 62,457, which is basically up here, 37.57, right about there. Okay, your target can be up there. So yeah, your stop can be a little looser. I mean, this risk reward here is 5-1 with this kind of a stop. So anywhere right in here is probably, if we see another green candle, we're probably good to go, and we do. We see another green candle here. We're probably really good to go here. So let's go ahead and say, okay, we've got our double bottom. We've got our level here that we wanted to be at. We've got our double bottom at that level. We're going to place our stop down here, maybe like under this 20. Our target, we know where our target was because we already measured that based on the size of this candle and this pivot point as the low. We can probably, yeah, right about there. That's right. We pull it in just a little bit, 62,460, something like that. So we know where everything is. We've already measured everything, and we just waited for a double bottom, and then we go ahead and see what happens here. Okay, here we go, going up nicely. Expect at least one significant pullback on the way up to target, and there it is. Okay, there's about a 5, 10, 15, 20-minute pullback. I'm not going to sweat it too much because what we're doing is we're going back and we're back testing with another double bottom. Looks a lot the same as this one, doesn't it? Looks a lot the same. We had a pullback, we had a bounce, and then we had a little bit stronger pullback. Okay, and now don't be surprised if it goes straight to target at this point, right? Now we're straight to target. Okay, we might have overestimated our target a little bit, but there we go. We hit the target. So basically, that's how that works. You want that giant impulse wave, okay, and you're trading 1 hour candles. You're looking for your pullback. You're looking for your continuation. You find your continuation point. You look for your double bottom entry against your 15-minute EMAs. And, if you want to take a couple of trades out of this, you could do that. If you want to take one trade for, say, one R here, and then do another one on the next double bottom for another, 1 R, 1.5 R, whatever, you can do that. But just remember that you're going to experience a pullback on the way up. You can wait for that one, get in on that one, because that one appears generally a little bit more dramatic. But they're both good. They're both going to be good. And this is a fairly easy pattern to spot. It's not that difficult. Now that I've shown you, I'm sure you can find it too. But the key to this is that to find your giant impulse wave, your pullback, your continuation, mark the level, and then go ahead in and find your double bottom at that level. Okay, 5-minute candles. Take your trade, set your target, and hold for target. Okay, that's it for now.